And now when we are looking at the jobs, something that is quite interesting to see is that there is plenty of demand. The problem comes from the supply. We are seeing a lot of jobs into the market, but many people don't want to take those jobs. They want probably work from home, more flexibility, and there's not a pickup. Now, this could definitely affect the timeline of tapering, probably to push even further to next year, if assuming that this weakness that we are seeing in the market continues to go into the same way as we have seen this month. So too early to say. We expected on the 16th of September, probably a market consensus that the first tapering will happen. Probably it will be delayed.
What's your outlook for the global economy? Are we starting to see a marked slowdown in growth? Of course, we're seeing this weakness when it comes to the US jobs numbers. Of course, China, the data points there showing some moderation as well. What is your outlook for global growth, considering that we do have, of course, this Delta variant of the virus that is impacting all corners of the world?
Yeah. Yes, absolutely. The concerns of the economic growth have really came back, and especially last week with China Manufacturing Purchasing Managers Index falling at the lowest point since the pandemic. And this is coming through what you said, exactly, the COVID-19, the Delta variant, which is having an impact on mobility restrictions. So the global growth has already passed what we think, for sure, has passed the peak. But it will remain relatively strong with the economic reopening. The Fed will continue to be accommodative no matter what. Even if we are talking about potential tapering, tapering doesn't mean tightening. And it will be potentially, even if there's going to be a tapering, it will be partially offset by the infrastructure bill. So we think we remain pro-risk. We are thinking that the benefits of this strong economic growth and reopenings will continue despite these setbacks from the Delta variant.